So the goal, thank you, now that we're recording, the goal is to identify clusters of emerging technologies and equipping our large organizations to shape markets, but more importantly, to kind of learn about these technologies and guide where these benefit children. And so why we're here today is to talk about one of the more controversial, I guess, aspects of the work that we do, but also one with great potential for impact. And this is blockchain. It's been something we've been exploring for a while. And I think actually I even had a conversation on it yesterday. People still associate blockchain with the volatility and the risk and everything that comes with that. But what we're here to talk about is to explore about the upside of what this technology brings us around transparency and trust and how we can use this technology for children. As I was preparing for this, one of the stories that came out was my first investment in ETH was actually back in like 2015 or 2016. And it was while I was actually on program in Indonesia. And I remember making this trade and then like in the midst of the technology thinking like, wow, how could this help children? How could this actually be used in the context that I was sitting there in a regional area in Indonesia? And so that's kind of what we're here to explore a bit more today. We want to focus resources on these problems that affect the world and create greater efficiencies in the public sector bureaucracies, and think about like, can we fundamentally disrupt these systems that may be broken? The main benefits we've both tested and seen through our internal prototypes with diverse community of tech partners are of leveraging innovating financing models, distribute resources, increasing efficiency and transparency, like I mentioned, of processes, and incentivizing and encouraging the creation and maintenance of open source digital public goods. So today I'm here to welcome you to the discussion on how we can leverage these disruptive technologies into improving financial inclusion for the most vulnerable. As we listen to the discussion today, I want you to kind of reflect on what you hear, and I'm going to plant some little like thought seeds in people's heads. So thinking about how we can invest in equitable innovation, that when we move fast together and not move fast from, but move fast with those groups that typically get left behind. Thinking about ideas like how could blockchain be used for climate change, particularly for cash transfers or maybe universal basic income. And also to spark ideas in your head about like where you could see trust and transparency being reimagined for the future and how blockchain could play a part in that. So today we're going to hear from blockchain experts that are sharing their insights on some blockchain-based solutions that are achieving real impact and understanding like how blockchain can bridge this financial inclusion gap. We're also going to hear from some Web3 investors on what makes these social impact focused solutions sustainable and viable investment opportunities. So if you, before I kind of introduce our moderator for today, if you have any questions, I'm going to direct everyone to the Q&A box or the chat, and our team will be bringing those questions together so that they can be answered by the people that have joined the panel. But to actually take this forward and take over from me so that I can be quiet and listen, I'm really excited to introduce our moderator, Anita Ramaswamy, the crypto and fintech reporter for TechCrunch and co-host of TechCrunch's crypto podcast and newsletter. Anita, I have to say personally, thank you so much for being here. We really appreciate you kind of bringing this conversation together. And I look forward to hearing what everybody has to contribute to it. So Anita, over to you, and thanks to everyone for joining.
Yeah, thank you so much for the introduction, Bo. It's great to be here, and I'm really excited for the discussion. Our first panel is titled, Can Blockchain Bridge the Financial Inclusion Gap? So we have three incredible guests, and I will leave it up to each of the panelists to actually maybe give a little bit of a brief introduction on who you are and what your current organizations are doing in terms of using blockchain to improve financial inclusion. If we wouldn't mind maybe going down the list, starting with Christina.
Sure. Thank you so much for having me today. So I'm Christina Lomazzo. I'm the blockchain ecosystem lead at Shopify. But I think important to this conversation, I was previously the venture fund lead for UNICEF and oversaw the implementation of the UNICEF crypto fund, and was also our blockchain lead 4 years back. So in terms of what Shopify is currently doing to work towards financial inclusion, we are building infrastructure to make merchants wallet aware and providing tools to entrepreneurs to engage buyers in new ways. But really in my role at UNICEF over the last 4 years, and we'll probably talk about this throughout the panel today, the venture fund made over 15 investments into blockchain startups working on a variety of different use cases. But particularly in 2021, we made an investment into a cohort of companies who were focused around financial inclusion. And there's lots of insights there to talk about, both from a startup perspective, but also how UNICEF was working with country offices on various aspects of blockchain and financial inclusion.
Thanks, Christina. If we can move to our next panelist, Hetal, if you wouldn't mind introducing yourself.
Sure, thanks, Anita. My name is Hetal Patel. I'm Director of Investments with Mercy Corps Ventures. Mercy Corps Ventures is a early to Series A investor, global investor with a big focus on new technologies and using cutting-edge technologies for solutions that helped underserved. We've really started diving into looking at blockchain real-world use cases over the last 2-3 years, have done investments, and we also have a pilot facility that really tests real-world use cases that I'm sure we'll dive into throughout this conversation. My background is in technology investments and management consulting, so I'm really happy to be here and chat new technologies and solutions.
Great, thanks so much. Moving on to our last panelist, Mark.
Hey everyone, great to be here. So my name is Mark Ziadeh. I'm a director of blockchain and digital assets at MasterCard. My blockchain journey started actually in 2014 when I was still working in consulting. And then I actually went into the rabbit hole when I joined Consensus as an early employee back in 2016, and now with MasterCard. And so MasterCard has been significantly, increasing its focus on blockchain over the past year or two, mostly focused on enabling secure and compliant crypto-related transactions, whether it is through our network or just in general. And as we think about financial inclusion, we also obviously, are focused on that through a bunch of things we're doing at MasterCard, whether it is the products that we're trying to offer, or working with startups throughout our Start Path Accelerator program, or even like supporting companies and policymakers and central banks around the world on these topics in general, but also focus on financial inclusion. We do kind of approach this topic with a mix of excitement and caution, with the understanding that technology alone is not the silver bullet, right? And some other layers of governance and compliance and regulations need to come with it to solve the complexities that surround the financial exclusion problems. And I'm sure we'll talk more about this throughout the panel.
Great, thank you. I think both set the stage really nicely, talking about how people tend to associate blockchain with sort of the volatility of the crypto market. So I wanted to start the conversation by asking all of you about what are some of the most compelling real-world use cases that you've seen when it comes to using blockchain to improve access, financial access for underbanked populations or underserved populations, just to give people sort of a tangible sense of what are some of the solutions out there.
I'm happy to start on that question. I think the first thing is separating crypto and blockchain, because they really have two different buckets of use cases. And in some cases, blockchain is going to be the right solution and crypto is not. And the real world example I'm going to give actually focuses purely on blockchain. There's no crypto element to it. And the one that I want to call out is a project. It's by a group called Ramaswamy. They're building a project called Hetal. This is a humanitarian assistance use case in Nepal where they're providing emergency assistance in the case of floods. So providing access to finances in the case of a flood. And the reason that this real world use case I think is really impactful is that it's not just helping the individual get access to funds in an emergency, but it's also helping the system. So the government agencies, all of the folks along the chain who are providing those services, providing more transparency, more efficiency in that use case. So you're not just able to provide that immediate response, but you're able to make the overall system better, faster, more resilient. And so that's a use case that is an investment company that UNICEF made back in 2021. That is now a pilot that's underway with the UNICEF Nepal country office. And so those are the types of use cases that really get me excited, where there is real benefit to the end user, there's engagement from multiple levels, and overall seeing impact all the way around.
Great. I don't know if Hetal or Mark, you have anything to jump in with in terms of real world use cases you've been seeing.
Yeah, sure. I think generally speaking, there's a number of exciting projects happening around, this intersection of blockchain and financial inclusion. A couple that are just generally interesting, which we haven't really worked with at MasterCard, but just are out there in the space, are companies working on leveraging blockchain to provide universal basic income for underprivileged communities in emerging markets generally, but also all around the world. I think two of the companies leading the charge on this are a company called Good Dollar, and there's another company called Impact Market, and they work closely with NGOs and social enterprises within the local country to figure out how to provide those sorts of incentives to those communities so that they can enable them to leverage kind of universal basic income and unlock kind of their economic potential through those initiatives. When it comes to MasterCard specifically, we do have a number of companies within our Start Path program that focus on a lot of the financial inclusion topics from different aspects. One of them is a company called SPEN, S-P-E-N, and it's basically a company that works with that focuses on actually digitizing the national currency for whatever country they're operating in. They're typically focused on African countries, and through that they basically are able to offer users stable coins that are basically the equivalent of the national currency in that country, and enable those users to actually set up their bank accounts and have access to a suite of services that typically they don't have access to, given that they don't have a bank account in the traditional sense. Another company that is also pretty interesting that we actually just announced they're joining us as part of StartPath is a company called Facet, F-A-S-S-E-T. And we're working with them actually in Indonesia to leverage their product. They're basically a emerging markets digital asset exchange to solve some of the financial inclusion problems in Indonesia, which has a large underbanked population. And so we do have a number of others, but generally the use cases are centered around either access to financing, access to digital currencies from the perspective of stable coins to have to be able to have day-to-day transactions and kind of unlock more economic activity. We also have a specific focus on communities and the creator economy, in the sense that people from wherever they are in the world can now create content and monetize it, whether through NFTs or in the metaverse context, or even through getting paid for their contributions, through something like USDC or stable coins in general. So yeah, I'll pause here, and I'm sure we'll talk more throughout the panel.
Great. I wanted to ask, all three of you sort of have these different backgrounds, and maybe Hetal, this can also, relate to any real world use cases that you wanted to share, but I wanted to hear a little bit about the angle of collaboration between nonprofits, companies, and governments when it comes to solving some of these problems. And I do think, Hetal, you have a particularly unique perspective there, given that you're, at a nonprofit, but sort of on the venture side as well.
Sure. Yeah, this rolls into a bit of the real world use case that I was going to share. Yeah, I think I think there are different categories for those use cases, and I'll touch on the collaboration pieces also. I think there's payments as I think that's the first thing that comes to a lot of people's mind. I think ID and going back to the real world use cases, especially for collaboration, is really important, especially when we talk about migrant and refugee communities. And then the combination of blockchain and DeFi can really unlock lower interest rates through liquidity, cross-border liquidity, a bunch of other things that we're looking at. Specifically on collaboration, given the nexus that the venture team sits within Mercy Corps, the agency, we've done a couple of pilots or are underway testing ID and/or wallets for cash humanitarian programming for refugees sitting either in Uganda, in Kenya, and a bunch of other places. Uganda happens to house, some of the largest refugee populations in the Horn of Africa. So yeah, I think there's a range of activities where the corporate side can contribute to some of those programming, whether it's in funding and or other ways. But blockchain and or crypto really underlie the foundation where people can plug in. And I think that's also one of my exciting future-ish use cases is that, on the continent, especially, but around a lot of the global South markets, we have a lot of platforms coming up, whether they are in FMCG or food systems. And at the same time, we have a bunch of services that are quite tough to de-risk without having the transparency and the rapid reconciliation that blockchain can allow. So whether that's in food systems and getting parametric insurance to smallholder farmers, or whether that's getting insurance or flood insurance to MSMEs that are at the front of climate change and getting floods and other things that are happening and ruining their shop and income levels. So I think there's a range of use cases. And I think the exciting piece of blockchain is it can allow corporates and humanitarian and startups in between, let's say, and enablers to really plug in with their expertise and solution pieces.
Christina, I'm curious if you have anything to contribute there, just given your experience sort of working at UNICEF and then going to Shopify about that collaboration piece.
Yeah, I think you said it so well that collaboration is really the important piece of where we're going to start to see big change. I've seen a couple examples of seeing NGOs, private sector, and governments working together. And I think it comes back to when we think about financial inclusion, what are the challenges that we run into? And Hetal just mentioned ID being one of the foundational ones, which it absolutely is. We also have education and literacy, that's another one, consumer protection. And all of that really comes down to, at its basis, is getting groups together and making sure that all of those groups are working together. So 2 examples of that I would just call out is, over the last few years, the World Economic Forum had a group that came together around blockchain and looking at the uses of cryptocurrency and released a few different resources that are available with the goal to build that financial literacy and the potential use cases. And then there's other advocacy groups that are out there now, for example, like the Crypto Council for Innovation, that really brings those groups together to advocate. In terms of projects, though, if we're looking at solutions that are available to large groups and where we see multiple layers working together, the example that I would point to is one that was just announced a few weeks ago. So if you haven't seen it, it's a good one to dig into. But this is a project called Giga, and they're looking to bring universal access to internet to schools around the world. And they made an announcement with the government of Rwanda that they have been staking crypto, particularly Ether, and that the revenue that's being generated from staking that Ether is then used to pay for internet connectivity. In my mind, when I think about financial inclusion and creating new economic opportunities, this is one that has massive amounts of impact, because not only are they taking crypto that was already there and just generating additional revenue that then's paying for internet connectivity, but then you can think about all the economic opportunities that having access to internet in that community and in that school is then going to be able to provide. So to me, that's a really powerful use case, and that's the government of Rwanda. It's UNICEF through Giga and some private sector organizations working together to deliver that.
Thanks, Christina. One thing I want to ask was, when it comes to startups or companies that are trying to use technology, particularly blockchain, for impact, what are some of the biggest mistakes that you see these companies making? And when these cases aren't successful, what tends to go wrong, and how can companies sort of avoid some of those pitfalls?
I'm happy to quickly answer that one, and then I'll hand it over to my fellow panelists. I think as product-driven teams, it's sometimes really easy to get caught up in your product and just be so passionate about the functionality or the ultimate use case you're trying to build for. And often it's really hard to either access the population that you're building for, or you just don't have enough users and you're not doing enough user testing upfront. So I would say getting results with users is a common pitfall that we'll see, where thinking that a test with like 2 to 4 people is enough validation for the population you're trying to build for. And it really you need to scale up the amount of users that you have using your platform fairly quickly.
Hetal, I see you smiling, so I wonder if you had something to add.
I think Christina hit it right on the nail on the head. In many ways, I think we really encourage, frankly, blockchain or not, when you're early stage, startup founder, to really keep testing and iterating your product and traction, right? Understand the customer insights. And I think when we're talking about inclusion and real world use cases for the underserved, that's even more important, because we're not going to be able to transfer everything that has been learned in other markets or more mature markets on how you access, include, distribute any of the products. And so to be really able to understand, I think it will help product development. It accelerates traction, and in the end, it accelerates any goals anyone may have, whether investors for valuation or impact investors for impact or anything else in between. And I think this is as important in financial inclusion or let's say payments apps, where people may feel they have some sense of what may happen. But even more important, let's say when we're looking at Web3 and crypto, or carbon, Web3 and crypto, and understanding how carbon and climate overlap. What are those solutions that can potentially give land stewards access? And what are those land stewards really going through? Because it's going to be very different than large project managers and others. So I think in different models, it's even more important to really understand that customer insights and testing traction.
If I can add to that, and disclaimer, I'm not an impact investor myself, so it's not my area of focus. But generally speaking, I think I'm a big fan of positive externalities. So I think the example that Christina gave in terms of like staking Ether, generating revenue and using that for internet connectivity, I think there is a lot of power to projects that enable positive externalities outside of their business model, right? That could lead to kind of more and more kind of a flywheel effect of impact being generated. And so I really love that example that Christina shared. The other thing I would say, specifically when it comes to social impact and blockchain, right? And as you guys probably know, blockchain is still a very volatile space, largely unregulated, some security issues. And so I think, startups and companies focused on that space should really consider, or at least think about measures that they need to have in place to protect their users in case those things happen. Or on the other hand, also have a clear set of criteria in terms of what types of cryptocurrency they want to work with, or what types of blockchain networks they want to work with, to make sure they don't end up in situations where the communities they're trying to help end up getting basically the negative effects of some of the incidents or things that are happening in the space right now.
Mark, I know that MasterCard is pretty globally focused, and I wanted to direct this question to you first and then open it up to the rest of the panel. I'm wondering about, what are some of the biggest impediments or hurdles to blockchain adoption, particularly in emerging markets? Obviously, each market, varies and has differences locally, but is it sort of internet access or infrastructure or some other challenge that stands in the way of adoption?
Yeah, I think that's a great question. So I think there are a couple of obstacles for adoption. By no order of priority, I think in general, education is a big one, right? So user awareness, user education, especially because user experience in crypto today is not really the most streamlined and smooth user experience compared to Web 2 and traditional tech. So having kind of a focus on that, or trying to figure out how to bridge that obstacle by providing the user with, the most kind of streamlined user experience possible, along with some awareness and education on what crypto is and how to use it, plays a big part there. I think the second one would be internet access. A lot of the emerging markets don't have the best internet access, especially in rural areas. And there are projects working on this, but in general, it's still kind of very early in terms of solving that problem. The third one I would say is regulations, actually, because there are a lot of countries, maybe more in Africa than other continents, where regulators are still not a big fan of crypto, and still have regulations that to a certain extent ban the use of crypto in a lot of use cases. And so as working with regulators, or even figuring out how to solve those problems along with the regulators and the central bank, is needed to get to a point where like mainstream users feel like that, it's a technology that they can use today without getting into any like sorts of issues with regulators or the government. And then lastly, I would say, outside of regulation, I think consumer protection in general is something that MasterCard focuses on a lot. And our philosophy there is that we want to try to have the same measures for consumer protection that we have in our card networks extended into blockchain networks, or at least the networks that we work with. And the reason for that is because, in today's world, we're obviously like very used to having a lot of consumer protections related to fraud, chargeback, security issues, and all of that. In blockchain, this is not the case yet, right? And this will be solved through either policies and regulations or innovation that could happen at the level of verifiable credentials, identity, and KYC and compliance in general. And so focusing on that problem and figuring out what tools can be used there and how to at least bridge the gap in the meantime with what we have is something we focus on when we work with our partners and our clients.
Thanks. Yeah, Hetal and Christina, I don't know if either of you might have some, background to share on what you've noticed in emerging markets being some of the hurdles or biggest challenges.
I'm happy to just build maybe on what Mark said around education. My biggest challenge that I've seen come up is really just localization. And I mean that both from a content perspective, having ambassadors in those regions who can teach in local languages, have resources available. Ethereum has really taken this seriously over the last few years, and ethereum.org has been translated into many different languages, and that's been a community-driven initiative. That is hugely impactful in terms of communities being able to access resources and enter the community, having access to it in their own language, having champions in the region. The other is just access to funding. And so ensuring that funding is going to all different regions to support all different use cases. Because I can assure you that something that is built in San Francisco or New York does not work in Sierra Leone or in Jordan or whichever other country, because the different circumstances need to be accounted for in a variety of different ways. And so ensuring that we're funding builders in these communities who are building for real world problems in their own context is really important, and definitely one of the barriers to adoption is not enough funding in these regions.
Thanks. Yeah, I don't know if Hetal, you wanted to jump in with anything there.
No, I think Christina, well, yeah, I think just adding to what Christina said, I think there are different layers, right? There's infrastructure when we talk about internet and other, and I think that can be potentially less localized, or there'd be solutions that come from different places, let's say Global North, et cetera, the example that Christina mentioned earlier. I think when we're talking about building, we do need to have more cross-pollination between where some of the things started and local. So there's a lot of local intellect, knowledge, and momentum around blockchain, and people are interested in how it can be utilized for solutions that work for a place like here. And I think being able to have the people who are funding it, who are interested in finding real world use cases and really bridging that gap is something that's still under work. It's in progress, and we're seeing progress in those areas. But yeah, I think intentionality will definitely accelerate that. And then with regulators, I think it's up to everyone, those local builders, it's up to the people, it's up to the NGOs, it's up to everyone to kind of understand. It's not a conspiracy messaging, but really understand like how to have the conversation and separate between extractive and consumer uses, and whatever it may be, crypto speculation versus technology uses that can actually unlock access.
Thanks. Yeah, and I actually think that last point that you mentioned is a great place to begin wrapping this up. I know we have a couple of minutes left here. And I want to go back to something, Christina said at the beginning of the panel as well about there's a difference between blockchain and crypto. But I guess even when it comes to blockchain, there are still a lot of concerns about security risks and, potential. I guess one criticism I hear a lot of blockchain being used in the impact space is that you're dealing with these sort of vulnerable and marginalized populations. And there are a lot of risks associated with adopting this new technology. So I'd love to hear from each of you about how you think through addressing some of those risks and how you would address some of that criticism as well in terms of, encouraging adoption among those groups.
So I can start. I think generally speaking, you're right. Blockchain, obviously, and crypto are different things. We're focused a bit more on the crypto use cases rather than the blockchain use cases. Even though, like, blockchain as a technology will enable in the future, I think, a lot of use cases outside of just the financial one into like more like healthcare and data management and identity and other stuff, right? But just like Hetal said, I think there aren't enough, or like there aren't a lot of like real life use cases yet, right? It's mostly the financial use cases that is driving most of the adoption in the space. And even within the financial use case, I think there are now, especially with the adoption of stablecoins, there is better confidence that you can actually build a crypto product leveraging kind of this stablecoin infrastructure rather than like having to go to Ethereum or Bitcoin to do that, right? So this removes the volatility part that a lot of people were nervous about, and rightly so, right? Now the second part of it would be kind of the general security related risks, and this has to do more with the stage at which the technology is today in terms of it, the infrastructure itself being still relatively early, right? Even though it's been like around 10 years now since Bitcoin started. And so from that perspective, we do have a lot of like products that we used to offer our clients outside of the crypto space around identity authentication and verification, fraud management, risk management, and all of that. And we repositioned a lot of these products along with some other crypto products that we acquired or built into something that we call crypto secure, that could help companies and startups and banks even get a better feel of what is it like to work with crypto, and like what level of security and what level of risk management they can enforce using those tools that we can provide to them. So that's how we're working on it in terms of like addressing those risks. And then lastly, I think in terms of figuring out what sorts of consumer protection measures we can have, whether it's a blockchain product or a crypto financial application, we're looking into figuring out how to expand our franchise rules to provide the same level of protections for crypto-based applications. And even though it's still a little bit early stage, but that's kind of this is the direction we're going for generally at MasterCard, which is like focusing on enabling one, optionality for the user to use crypto, and two, providing the user with compliance and security so that they can feel a certain level of confidence as they purchase crypto and perform crypto transactions.
I really see this as two buckets. The first is, do we want to continue operating in a world where the rails stay exactly as they are? And the second world of, do we reimagine the rails because blockchain has introduced something new that lets us redefine power dynamics, lets us bring new stakeholders to the table in a way that they wouldn't come together before? I think that's the more idealistic one, but the harder one to achieve. If we're concentrating more on let's work within the rails that already exist, I think that's how you manage risk. It's the question of how would we do this with fiat, and how can we do this if we're talking about crypto specifically? What do we need to put in place to be comfortable for this to be as close to the fiat rails that we have now? And there is a way of doing that. It's just a lot of work. UNICEF can speak to it because they launched a venture fund that was US dollar denominated for 6 years and then decided to launch a crypto denominated fund. But I think another good example of this, and Mark alluded to this, is stable coins. So when we're looking at some of these risks, again, following the rails that we have for fiat, but then if we're looking at this in the context, for example of humanitarian cash transfers, and Anita, you had mentioned like working with the most vulnerable, for example, humanitarian cash transfers, you're dealing with very vulnerable situations. This is where you could implement something that's very close to the rails that you have for US dollars, but you could have crypto on the back end. What it really comes down to is how you design that experience. So user experience is what is at the crux of it. And we still have a really, really long way to go as it pertains to user experience and making sure that we're keeping all the rails in place while creating a really nice user experience. But I also want to acknowledge how far we've come as an industry of, we have Ethereum name service or ENS now, so you don't have to put in a long string of letters or numbers. Or you can do debit cards where you can withdraw cash, but actually all the accounting on the back end is stable coins that's happening. So there has been so much innovation that's happened over the last 10 years, but of course we still have a really long way to go as well to make the experience even better, while ensuring all of those risks and mitigations are in place.
Thank you so much, Christina, Hetal, and Mark. I think that's all the time that we have, but this has been a great discussion. Really appreciate all of you spending time with us. And I want to pass the mic to Megan Warner, Portfolio Manager for the UNICEF blockchain cohort. And Megan will be introducing the cohort and the startups in it.
Thanks so much, Anita. And thank you to the panelists for leading us through those thought-provoking conversations on such an important topic. My name is Megan Warner. I'm one of the portfolio managers with the UNICEF Venture Fund. In particular, I'm the portfolio manager for the blockchain cohort that you're going to be hearing from today. It is my absolute pleasure to be introducing this cohort to you. Before we hear from the companies, I'm just going to share a brief recap of the cohort and its notable results to date. This blockchain cohort had a very clear theme around financial inclusion and was initially onboarded to the Venture Fund in May 2021. This was the first blockchain cohort at UNICEF to receive investment in both crypto and fiat. We initially onboarded 8 companies to this cohort. By the end, we had 5 companies successfully graduate and 1 company that was acquired from this cohort. The companies were working on developing solutions focused on remittances, humanitarian cash transfers, loan and investment services for underserved communities, and decentralized decision-making tools. In addition to receiving funding from the Venture Fund, these companies also went through a very robust technical assistance program where they had recurring engagement with both strategic and technical mentors. We're very happy to see the results of this program reflected in the traction of the companies. So just looking here at a high-level snapshot of the results to date of the cohort that you're going to be hearing from, you could see there were over 700,000 beneficiaries with increased access to financial services. From these solutions, over 120,000 financial transactions were enabled with the technology these companies developed. We had the first startup give back to the Venture Fund. That company is XCapit from Argentina. You'll be hearing them present later on. And we very much hope that them giving back to the Venture Fund sets up the precedent and opportunity for other companies to do this in the future. We have one ongoing pilot, as Christina had mentioned earlier in the pilot, between the company Roomsum from Nepal that developed the solution Rahat, a cash and voucher assistance program, that have an ongoing pilot with the UNICEF Nepal country office to reach over 1,500 households in Nepal in flood-affected areas and for families that were affected by the COVID-19 pandemic. Looking at the financial results of this cohort, you could see collectively these companies raised over $4 million in funding. We had one company that was acquired by IDT Corporation, and this really speaks for the interest of investors, not just in the blockchain space, but with companies that are working with an impact lens as well. We also see one cohort collaboration amongst 2 companies in this cohort between Kitani Pay and Trajir that you're also going to be hearing from later on. And this really validates the value of the open source technology that these solutions have developed during their time with the Venture Fund, and the opportunity for this technology to be repurposed for different use cases. You can see here a bit of the results from the technical assistance program I had mentioned earlier. We had over 500 mentorship hours facilitated by the mentors that are part of the UNICEF Venture Fund support program. We had 4 companies that were certified digital public goods out of 5 graduating companies by the end of the graduation period, which was our highest number to date. We had over 6,000 code commits to the repositories for these companies. And we had almost 40 people who contributed to all portfolio companies' repositories over the duration of their investment period. And this was our highest number to date. So really impressive results overall from this cohort. I would just like to mention, before introducing the first company that's going to be presenting today, that we're going to be sharing after this event a package of resources for all these companies that are presenting here today. So we very much welcome, if you are interested to connect directly with any of these companies, to reach out, and we're very happy to facilitate the introduction directly with these companies. With that, it is my pleasure to introduce the first company to you that's going to be presenting today, the CEO and co-founder of XCapit, Jose. Jose, over to you, please.
Thank you, Megan. Really nice to be here. Let me share with you my first financial experience, a piggy bank. This was cute when I was 6, but actually this is the only financial system that Latin America has, and this is the reality of 65% of population. Suddenly, we knew that we had to transform finances into an engine for human well-being, and that's when crypto and blockchain came. We built a non-custodial wallet just as the piggy bank, so as to people to have their custody. Also, we made it mobile and multi-chain. Over there, we counted on the support of UNICEF to bring in this as a digital public good, so as to create lasting social and economic impact, willing to break intergenerational cycles of poverty. We reach global impact. Nowadays, we are in more than 80 countries within more than 50,000 users that now can go from fiat to the metaverse and back all at once in the palm of their hand. They can learn, buy, invest, save, and even donate all at the same way. We have a B2C model in which we charge a transactional fee on every transaction that it's made in the wallet, and also we charge from Web3 revenue, but mainly we gather together 35 talented and passionate people willing to tackle an opportunity that it's only in Latin America above the $10 billion. We rely on the strong partnerships so as to continue growing within Colombia, Argentina, and Brazil, relying on UNICEF, Santander, Polygon, Ethereum Foundation, just to mention, and willing to get not a piggy bank, but instead of that, a healthier financial system for all of the ones in Latin America that need access and opportunities. Happy to speak with you for further opportunities. Thank you very much.
Thank you so much, Jose. And next, I'm happy to introduce you to Keith, the CFO at KitaniPay. Keith, over to you, please.
Thank you, Megan. My name is Keith Mandela. At KitaniPay, we are last mile blockchain infrastructure accelerating financial inclusion. The problem that we are solving is one of financial access. Of the Africa's population of 1.3 billion people, there are 770 million mobile phone subscribers. About 60% of this number use feature phones with limited internet connectivity and limited storage space. Blockchain networks are built with mainstream smartphone users in mind, locking out millions of people from the benefits of blockchain technology. KitaniPay is a technology stack that connects blockchain protocols, decentralized applications, and fintechs to local payment channels to enable access to digital assets. It provides full blockchain wallet functionality on interfaces that are already familiar to our target customers like SMS and USSD. It works both on smartphones and on feature phones. We offer an API for businesses and a USSD solution for end users. We have worked with various organizations, including UNICEF, Mexico, Celo, Twitter, among others, to enable diverse use cases. And over the last year, we have achieved a number of things. We are currently recognized as a digital public good. We have served over 3,000 users in over 10 universal basic income communities of refugees and the disadvantaged. We've enabled over 500 users to receive gig work payments, and we have enabled small and micro enterprises to receive capital of over $1 million to serve about 20,000 end users. We currently have 5,000 active users with over 15,000 beneficiaries. Our business model is a transaction fee-based model. We have processed over $6 million year to date and have made over $50,000 in revenue. We raised $825,000 in our pre-seed round and are looking to raise $3 million in a seed round. This will assist us to expand from the current team size of 14 and the countries that we're currently live in, which are Kenya, Ghana, and Zambia, to serve other African countries. We're also looking to connect to cash transfer programs and to connect to exchanges and crypto wallets. Happy to have a chat after this. Thank you.
Thanks so much, Keith. I'm really impressive to hear the traction of KitaniPay team's work today. Next up is Urmia, the CEO and co-founder of Treasure. Over to you, please, Urmia.
Hi, everyone. It's Ermia, one of the co-founders at Treasure Protocol. we are building a tree planting plugin for the new internet using Ethereum technologies. We are doing this because we believe climate finance lacks transparency when it comes to managing the funds and tracking impact data. Also, unbanked communities have less access to climate grants and can receive the funds directly. A significant portion of the money are actually lost before they get to the hands of the recipients because of either high transfer fees or sometimes corruption. Another issue is the low survival rate of trees. Because most of the projects focus mainly on the plantation phase, reforestation projects, and therefore we face inaccurate carbon and impact data calculation. So let me introduce to you Treasure. Treasure is an open protocol connecting donors to rural planters worldwide. The project leverages cutting-edge concepts such as NFTs, smart contracts, and decentralized finance to unlock new opportunities in climate finance, forest conservation, and rural development. Treasure incentivizes forest conservation even after plantation by locking up the funds in the smart contracts and releasing it periodically as planters provide more updates from the forest status. The protocol also provides proof of impact to donors in the form of beautiful tree NFTs after donations. So far, we have raised close to $100,000 from 2,000 donors on Gitcoin, a crowdfunding campaign platform on Ethereum, $100,000 in protocol revenues. We had $100,000 in protocol revenues in the first 3 quarters of the year, and there are almost 100,000 trees being planted across multiple projects in 10 countries in Latin America, Middle East, and Africa. We made a lot of partnerships along the way, and so far we made $200,000. We raised $200,000 in investments from crowdfunding and UNICEF venture funds, and we are raising between $3 to $5 million to actually doing the enabling our vision for Treasure, and we are seeking in impact investments and new pilot partnerships in the Latin America, Africa, and Middle East to further continue working on Treasure. And at the same time, we are seeking partnerships with institutional partners to fund upcoming forest projects. Please, if you have any questions, let me know in the chat, and also you can watch the demo and more information about Treasure in the links that you're seeing, and I will also put them in the chat. Thank you so much.
Thanks, Rami. And just a reminder that your demo will also be included in the package that we'll be sending to attendees after the event. I'm really impressive to see the global reach to date of the Treasure protocol. Next, I'm excited to introduce you to Gabriela, founder and product manager of BX Smart Labs. Gabriela, over to you, please.
Hey, thank you, Megan. So studies from the International Labour Organization show that more than 60% of the world's employed population are in the informal economy. And since institutions require proof of income to give any credit, these 2 billion informal workers around the world get just excluded or get super high interest rates, like above 100%. One of the alternatives we have are saving circles that bring together community members that in need of credit and people that need, let's say, social encouragement to save. With this system has been used for many years around the world in countries of Asia, Africa, and Latin America. With Blinks, users can create saving circles just within minutes on their phone. Anyone can check the status of the round with the assurance that the information is reliable because it's on a blockchain. Also meaning that payments can be done from anywhere. You can do a saving circle from someone in different countries from Asia and Latin America, and it's no problem. And we are using a non-custodial wallet. Upon registrations, users make an advance payment that is returned to them by the end of the round. We charge 5% of this advance payment, and an extra 10% of our token emissions that are minted are sent to our developer fund. Each saving circle currently is limited to people that you trust, people that trust each other that will make payments timely, and therefore have limited scalability. The version that we have released emulates these traditional saving circles, but now we have the information on the blockchain. And we have developed a reputation system that allows users to have a trusted record of their reputation. And eventually this will serve so users can participate with saving circles from other trust circles that may not be related to each other with this trusted reputation. In the next months, we will be conducting workshops with the support with the Ethereum Foundation focused in informally employed women that cover topics like, I don't know, basic budgeting, wallets, and actually use Bloinks as first of their dApps, let's say, as an introduction to the blockchain ecosystem. We are looking for partners that might also use these workshops that can bring more people into blockchain and have the benefits of this blockchain and crypto system. And so if you have any thoughts or any communities that might benefit from this, please contact us later. The idea here is that we can empower communities through blockchain and to make them independent. So thank you.
Great, thanks so much, Gabriela. And last but certainly not least, it is my pleasure to introduce you to Rumi, co-founder of Roomsun. Rumi, over to you.
Thanks, Megan. So Rahat is an open source blockchain-based cash and voucher assistance platform to support vulnerable populations. And with the impact of climate change and emergent conflicts, there's been a rapid rise in the need for humanitarian assistance globally. But with the 1.7 billion unbanked population, reaching the most vulnerable is very, very challenging. And also aid distribution projects are inefficient, expensive, and opaque, and are usually plagued with the challenges of potential fraud and mismanagement. And this begs the question if aid money is actually reaching the ones who need it the most. And we are addressing these challenges with Rahat. Aid agencies can use Rahat to manage their flow of funds with verifiable transactions and real-time monitoring without compromising on security and privacy. It also lowers the cost associated with financial reconciliation, and with blockchain's built-in model, the cost of infrastructure and security can also be decreased significantly. So Rahat uses blockchain-based mobile tokens that can be pegged to cash and or commodities. And we've built easy access to aid for beneficiaries by using SMS, QR codes, NFC cards, or digital wallets. And so even unbanked beneficiaries can use their feature phones as a digital bank, giving them the ability to easily redeem part or all of their cash assistance at their will. So last year, with UNICEF Venture Fund support, we developed and tested a solution impacting over 5,200 beneficiaries, including women in maternity and school children in Nepal. We have worked with various partners, including Nepal Red Cross Society, and are now currently in the midst of a large-scale pilot with UNICEF Nepal and the local government here to support 1,500 households in rural Nepal. So Rahat is now a certified digital public good, and our revenue model is based on subscriptions, transaction fees, and customizations for aid agencies and government bodies, meaning the solution is always free for beneficiaries. We have validated our solution in Nepal and are now looking to scale to different countries and build community DAOs for greater financial inclusivity. So we're looking for partnerships and the right investment to expand in Asia, Latin America, and Africa. So really looking forward to connecting with anyone who's interested to learn more. That's it. Thank you.
Great, thanks so much, Rumi, and thank you for all the companies that presented today. It's been a fascinating journey to watch you all grow over the past 12 months. With that, I'm happy to pass it back over to Anita to lead us through the question and answer session. Over to you, Anita. Thanks very much.
Thanks, Megan. We got some questions from the audience, so I'm going to just select a couple of them because we have just a couple of minutes here. The one that I wanted to start with was about blockchain and its impact on the climate for the three panelists. This question was, we can all agree that blockchain has a lot of merits for financial inclusion, but how can we consciously promote blockchain with all of the issues surrounding climate change? Besides Ethereum, which has attempted to address this, many other blockchains have not. How do we proceed?
I'm happy to start. So I think this is a conscious decision that each organization has to make in terms of what their climate targets are and make a determination on which blockchain they should be using that meets their climate goals. I've seen this happen in a variety of different ways, either choosing a blockchain specifically that aligns with climate goals, or if they choose a different blockchain, having a way to offset the impact that their participation in that network is having. But it is a conscious decision that you have to make, and you should really look at your own criteria and how you're approaching your product implementation based off of that.
Thank you. I actually am going to keep moving through these questions so that we get to all of them. One more that came in from the audience was, for the projects that are aiming to provide financial inclusion in terms of crypto-based wallet solutions, how are cash in and cash out problems being addressed, considering there's not an efficient crypto payments and collection ecosystem in some regions or communities? I think this is sort of just getting at some of the, challenges for, that maybe stablecoins are addressing in some way. I don't know if Mark, you had some insights on sort of the payment collections piece in terms of the different challenges in different regions.
Yeah, I'm not very close to this topic, but I think depending on the local market, there are solutions in terms of like providing this off-ramp and on-ramp and off-ramp service or product to the end user. Generally speaking, it's been mostly crypto exchanges or crypto wallet providers or crypto custody providers. There is another way to look at this problem, I think, and it's looking at it from the perspective of building circular economies, in the sense that if you're dealing with stablecoin, right, if you can figure out how to build the right alliances and the right partnerships so that the stablecoin can circulate across many different offerings and products rather than having to cash out to actually use it, is one way to also solve that problem, even though it's not an easy thing to do, right? It's a lot of hard work to establish that. So this would be my take on this. In terms of like actual like recommendations, depending on the market, happy to look into it and provide some ideas depending on which market the question was relevant for. But in general, it's not really my area of focus at MasterCard.
Sure. Thanks for taking a crack at it anyway, Mark. I appreciate that. I'm going to just pose one more to the panel and then we'll move into our second panel. The last question I wanted to ask was from another audience member. Do the panelists have suggestions for reputable, affordable KYC providers for emerging markets? Any thoughts there? Or if not, we can move to the next panel.
I mean, I think it's going to matter on which market you're in. There isn't one that's covering all the global South markets. They're pretty diverse and different, whether in Latin America, India, other places. India has Aadhaar, which has national ID, and UPI, which is basically kind of a really payments rail in a sense, whereas the African continent is very different and you have ID challenges and or money challenges depending on where you are, not in Kenya, let's say, because they have M-Pesa, but other places. And so I think it's going to depend, quite frankly, because of those challenges, any successful platform, whether FMCG or others, are becoming quite quote unquote KYC, and people are plugging onto those rails to conduct businesses or have add-on services. And so I think I've seen startups there, I won't name them, but there are a few startups trying to use and triangulate a variety of data to have ID and KYC, and both are slightly different. And so I think that's also another nuance that one has to be aware of. But there are people, trying for solutions and different ones, but I think it's going to matter on where you are, what market you're trying to work on, and what solution you have.
Great. Thank you all so much. I think we should go ahead and move into our second panel, Blockchain for Good, Insights from Industry-Leading Web3 Investors. We have three incredible speakers. We have Scott, Nisa, and Aaron. And I think we can get this one started if all three of you don't mind introducing yourselves and giving just a brief few sentences on what your firms are doing at the intersection of impact investing and Web3. Nisa, I see you're here, so if you wouldn't mind getting us started, that would be great.
Sure, can you hear me?
Yes, yeah.
Okay, great. Well, first of all, thank you for UNICEF for having me. I've long been a fan of the work the group has been doing, and this has been so far a very enlightening day. So my background is I have been in venture capital for about 12 years, generalist tech investor at first, and then have been investing in blockchain for the past 6 years. I set up A100X probably like late 20 because I saw a void in the market. There were a lot of big crypto firms sort of chasing the same kinds of companies and not enough attention being paid to founders who were coming from their industry, who were building using blockchain to solve problems. And prior to that, I've been a corporate securities lawyer, very actively involved in regulation in the US, and have worked in media in between those two. And so I'm involved in a bunch of different companies on boards, and you know, have been very passionate about the areas of changing the narrative that we've seen in crypto, and really using blockchain for good.
Great, thanks, Nisa. Great to have you. Scott, if you wouldn't mind going next.
Awesome. Hey, everyone. I'm Scott. I co-founded Gitcoin back in, I think, like 2017 now, which feels like a long time in the Web3 world. A lot of my work tends to be at the intersection of giving kind of grants in a community-first way to digital public goods, mainly in the Web3 context, but increasingly beyond that. So we've done rounds that support climate projects. We've done rounds that support, for example, the ongoing situation in Ukraine. We've done rounds that support a number of different sort of social causes as well, because we believe that, you know, although we talk about a lot of open source software in Web3, there's also a lot of real world infrastructure that we need to make sure is, you know, kind of managed effectively. So to date, we've funded about $70 million across those different areas. And personally, I've also been involved in just investing in the space and supporting builders in a lot of those areas.
Yeah, and Aaron, to round it out here. Oh, I can't hear you.
How's this?
Better.
Better? Okay.
Yeah.
Good. Yeah. Okay, good. Yeah, so hey, I'm Aaron. I'm CTO and founding partner of Outlier Ventures, the #1 Web3 accelerator. We work with over 200 startups a year, founded in 2014, and we did in multiple accelerator programs, both our own original Basecamp and ecosystem accelerators with the likes of Polygon, Polkadot, and Filecoin, and now also more thematic accelerators such as the recently started Dream Assembly with Farfetch, the luxury online retailer and facilitator. We are definitely not exclusively an impact investor, and we don't have like an impact cohort. However, it has been something that's been in our DNA since the very beginning. Like through the years, we've had various work with teams in various formats, and the very first use case was actually something around saving circles, such as one of the startups earlier presented, and enabling people there to, you know, have financial inclusion. And it's something that we increasingly see with actually guided by an interest in the space, like the refi, I'm sure phenomena. We'll talk about that, but it's really come up as something that's, you know, attracting people to use these primitives that have emerged from the crypto space, to apply those to use cases that are good in ways of doing things around climate change or carbon capture or saving nature, those kind of things, because you can actually apply them now that they have sort of matured. It's still early, but yeah. So yeah, I'll pause there.
Great, thanks so much, Aaron. And you actually are already started sort of getting to what my next question is, but I guess next I wanted to pose it to Nisa as well. Since the two of you are not actually strictly impact-focused investors, how do you think through balancing some of these financial and impact goals when you're making investment decisions, particularly in Web3?
So the goal of A100X was not to be an ESG, certified fund, because the barriers to that, at least in the US, are still significantly high. But it was, just like Aaron was saying, in our DNA from the beginning. And it was a point of differentiation or from what we had seen in the marketplace. So we always look for founders that share those values, and whether or not they are currently, producing products that are going to have direct impact. It's on their roadmap. And they're also sometimes using adjacent technologies such as artificial intelligence and using the convergence of those to try and produce, new types of solutions to these problems. Obviously we're returns focused first, but the old adage that you can have returns and impact, I think is antiquated and going away. I think you can have double bottom line impact, and that has been proven out. And we offer, this sort of, for the true impact funds that are out there that don't understand blockchain, we offer that solution to them to make sure that we validate the tech, that they feel more comfortable participating in these types of projects, sort of like a bridge to traditional impact funds. So yes, we try and offer up a diversified portfolio in lots of different areas.
Great, thanks, Nisa. I want to direct the next question to Scott, actually, given that you have sort of a different perspective into all of this. Gitcoin is known for this sort of quadratic funding model. I was wondering if you could just walk us through what is that, and just address, like, was crypto a necessary ingredient to some of the funding solutions like quadratic funding that you came up with at Gitcoin, or is it something that you think could work in other realms too?
Yeah, that's a great question. I'll try and give like the TLDR explanation of QF because there's a lot of complexity in the ways that different folks implement it, because there's more kind of implementations than just ours at the moment. Although we sort of first came across it when Vitalik, Glenn Whale, and Zoe Hitzig published their paper in, I think, mid 2018. And the idea is very simple. It's basically, in traditional investment or philanthropy, you have a lot of top-down power in terms of who is making decisions. So you have decisions being largely made by a handful of sort of individuals who I think often make very good decisions with respect to how they're actually deploying capital. But the real challenge comes with, I think, how do you get, broader community to have a say in the way that things are funded according to their genuine, like, revealed preferences. So the way that you do that basically in practice is you let people donate their own capital towards a set of projects in a grants context. And then you use kind of a effectively like a dampening effect to make sure that the community's sentiment is measured according to the number of people that are donating to a project, not just the amount they're donating, while using the amount they're donating as a kind of sort of signal for how much they care about something. And in turn, what you get is a really good sort of preference map of what the community wants to see in the world. And you can use that to deploy matching funds from either larger philanthropic donors, larger investors in a given space. So in our case, we have a lot of Web3, basically investors, Web3 projects who want to see more infrastructure of certain types in the world. They put up matching capital. And then that matching capital is basically distributed according to that community sentiment as it's generated each round, usually over a 2-week period. I think to date, the biggest difference in using crypto for this has really been the fact that you get to do this at a global scale across what I would call like almost digitally local communities. So there's lots of physical, locations, jurisdictions. I think one thing about the Ethereum community in particular is that it tends to have a certain broad ethos and sort of set of ideas and set of projects that it's aware of. And sometimes, as Anita mentioned, this is a problem because it means that it doesn't expand beyond just the scope of its existing community. But what it means is that in practice, you have the ability for local kind of digital communities to determine what they care about and to allocate funds according to that. And you could imagine this being used even in the context of, a subreddit. You could imagine this being used in the context of, although maybe, it's a complicated territory to wade into now, but in Twitter circles, you could, certainly imagine this being used in the context of also physically local jurisdictions. And that's been true for us with groups like nonprofits in Oakland. So I think, crypto is not a necessary condition. I think actually, I would love to see more experiments around quadratic funding that use simply local currencies in a physical jurisdiction. But I think the kind of global nature of crypto allows just many more people to have a voice in something without any of those kind of barriers that usually come with those jurisdictions.
The next question is one that I want to pose to all three of you. And I want to ask, how would you give advice to, let's say, founders or entrepreneurs who have an idea for a company and they think they want to incorporate blockchain or Web3 technology, but aren't sure about that? I guess what I'm getting at is, are there any particular types of people or types of companies that are particularly suited to using those sorts of solutions and building in Web3?
I definitely have opinions on this, but I'll let maybe someone else jump in first and I can come in.
Yeah, I'll jump in. We get quite a lot of founders who apply for the accelerator who are not into blockchain yet. They're, I would say, Web3 curious. Maybe they've, used some NFTs or Web3 products or crypto in a personal capacity. They played with it a bit, but with their startup, they haven't quite, incorporated that. But they see maybe there's something here. And that's usually a fine starting point, because ultimately, what was also said in an earlier panel, like the validating with users, getting traction, getting people to use the thing that you build is still the most important, no matter what you do. But as you build out what it is that you're doing, because hey, actually we have this thing, and now it actually makes a lot of sense to put this in an NFT that does certain things, and then people can transfer it. Okay, now we're going to do that. So I believe quite a lot in that incremental addition of the Web3 toolbox to use case. Of course, there are many people who are Web3 natives. They say we're going to build a new layer 1 network and this and that. Okay, that's an entirely different category. But the former category is actually much larger. It's almost any business, any new business that can and wants to explore these primitives.
I agree with Aaron. There are two types of founders, really. There are those who are native digital assets and are looking for how to use the technology to solve these problems. And then, especially over the past year or two, there's been a wave of entrepreneurs that are coming from their industry that are getting familiar with the tools and realizing that they can use them to solve some problems that they couldn't solve originally. And I think because it seems like I'm investing at a little bit later stage than the other panelists, that I see more of those. I'm not seeing too many founders saying, well, maybe we'll use blockchain down the road. They're already using it by the time I see them.
Yeah, I think my interest here, I think largely comes down to, and this is just my focus areas. It's really DAOs and the concept of kind of creating these digital first organizations or internet native organizations. I think that when you look at traditional companies, you have a lot of potential friction that emerges in the way that they operate that mostly comes down to existing, potentially existing jurisdictions, existing ways of operating. I think there's been more discussion of this post-pandemic with remote work as well. But I think in the context of kind of digital first organizations, having some form of like shared currency, some form of shared kind of culture online that people are building together in a relatively frictionless, kind of like transparent, permissionless way. Like, so allowing anyone to kind of join an organization and get involved, allowing anyone to kind of be involved with even just one part of a task and kind of flexibly participate. I think that's something that is very difficult to do in the context of traditional organizations. And I think that like that actually is useful across industries. Certainly there's more, benefit for that in say industries that are solving problems that tend to apply globally. So for example, like carbon capture technology is something that applies pretty equally no matter where you're deploying it. It's doing the same thing and it's doing something very meaningful in that context. But I think the important part really comes down to how are you running the organization that you are putting in place, and how can you use this technology to actually improve not just the community participation in that process, but also just the efficiency potentially. Although I think we're still in early days of that being fundamentally true across the board of how these organizations can achieve those goals. So I would definitely, I'm biased as someone who kind of like works in the DAO ecosystem in particular, but I think that's a really interesting area that is still very emergent.
Thanks, Scott. My next question is a bit more philosophical, I guess, so bear with me here. But I'm wondering, I've been thinking through a lot of the issues when it comes to funding and funding flowing to certain impact-focused projects in Web3. And I wanted to hear all of your takes on when do you think a specific project should be receiving, like, let's say, direct grant funding versus, sort of dilutive venture-based equity funding?
I think in my view, and maybe we'll start like kind of with the like least dilutive and work our way up. I actually think, and maybe this is actually a hot take in some ways, I think both grants funding and venture are not incompatible. I think they're very, very in tandem and aligned. And the reason that I think that is that there's often projects in Web3 that through receiving venture actually end up giving more back to the community because you have this ownership model, like in the DAO context or otherwise, like where basically community members are given more participation and given more effectively to some degree ownership or a sense of connection with the community and participation in some form of governance, for example. And I think that that's fundamentally like one, it's just like a nice sort of like democratic principle, I think in some ways. But I think the other reason it's valuable is that it means that when you give someone a grant, in the case of Gitcoin, we've had many projects that I think folks would know that have come through the program. So Uniswap was an early grantee, Optimism, which is a relatively large layer 2. Things like Regen Network have been participants in this among more of the climate side. And they've all gone back to help the community in various ways. So for example, Optimism has been actively experimenting with this notion of retroactive public goods funding. So giving back to builders who have committed a lot of their time and energy to making something valuable, but maybe not received any venture in return. At the same time, those projects that I mentioned have actually been able to do that partly because after they received grants funding, they went on to receive venture and went on to basically lever up the way that they were operating, something that they already knew would work. So I think to answer the question, like grants funding works really well when you don't really know where this thing is going to go. When you're just building something, you don't have like a formal idea of how to structure the organization, of how to potentially scale the community, of how to even in theory, monetize in whatever way. I think that's where you really end up with the sort of value of grants funding. And it's why even in Web 2, you've started to see a lot of smaller, like fast grants type programs that have emerged, because it means you can execute with much smaller amounts of money very quickly, versus potentially getting stuck in a very long process. So I think that's sort of my view on the funnel of sorts, and I think it's very compatible.
Thanks. Yeah, Aaron or Nisa, anything to add there?
Yeah, definitely. I agree with everything you said, and I think like from our perspective, we often get teams that have received some grants and then found, they saw the light, and actually, this can be a venture. And I think this process of, okay, what you described about optimism, for example, like at some point that was an idea of one or two people, and they went into Gitcoin, and then it evolved, and now it's this big thing that has a token of value, and that is a public good that is very valuable, and also concretely can pay out grant itself even, or it can send some tokens back to Gitcoin for thanks for all the fish. And this like Web3 has really made it possible to capture the value of almost anything, and add financial streams around it, and governance streams as well through DAO tooling. And like in mainstream media, often you see the excesses there, like, oh well, there's this meme coin, and now it's so valuable, so this and people now have gained money, and now they lost money, so this thing is worthless. No, okay, you see the excesses, but that's against all the hundreds of examples where it does work, and where it does start to mature, and where we now know how to create tokens that actually make sense. So yeah, the like getting grants, receiving grants, and then from that, or staying there, maybe you received a few grants and you created an open source library, and that's it, you move on. That could also be very well be the case. Or you see the light for, hey, this is actually a venture, let's pursue that path and take venture investment for it.
Yes, so I think when you're first starting out, or you're searching for community, and the grants programs of all these layer ones have really tried to attract developers, who the developers may go wherever there's a big grant or wherever there's a community, and try and build that way. But yeah, I agree with what Aaron is saying. And the media will always focus on the negative, because that gets more clicks. That's been proven. So there is a lot of really great projects and examples that have come from grants, and then at the same time venture backing. So I think you get different kinds of help from each.
I want to switch gears to I just have a couple more questions here, but I want to switch gears to a different area, which is just this idea that, there's a lot of data to support this. Web3 as an industry is even more lacking in diversity than tech itself. And when we're thinking about building some of these solutions for the long term, you kind of want to have everyone have a voice and have a say in shaping the future of that technology. But given that there's such a huge, gender imbalance, not to mention all the other parameters of diversity that are lacking, why, and I want to particularly sort of pose this question to Aaron and Scott. I know, Nisa, you've written on this topic in the past, but why do you think this problem hasn't been addressed in any serious way yet? And how can investors and leaders in the ecosystem begin to actually remedy the issue of gender imbalance in particular, and lack of diversity in Web3 as a whole?
Yeah, I think it's a really important question. And I think the space kind of mirrors a lot of the problems just in tech generally. Tech has had imbalances, I think, for decades. And I think crypto is really no different in that regard. I think the need to, I think the one thing in crypto that maybe is more of a challenge is the fact that, I think we're still coming out of an era of like culture in crypto that was largely, honestly, and this might be also a hot take, but like shaped by the Bitcoin community and sort of some of the ideas there, which I don't think are really as reflected in like communities maybe like Ethereum or Cosmos as much. For our part, we actively try to fund projects in that area as well. So we have a DEI round that we run each quarter. And the goal of that round is really to, one, fund groups like Meta Gamma Delta or like Shopify or Women in Blockchain that are focused on that issue. We also are actively trying to figure out ways, even just within the DAO itself, to make sure that the people who we're basically bringing on represent diverse voices and communities. And I think one of the challenges is mostly the same way as in tech, like really creating, like, again, that culture that makes different sort of groups feel safe and welcome. And I think we're getting there slowly. Like, I think we could get there faster. It's like always a lot slower progress than I think we would want. But definitely feels like, at least in the last, especially the last 2-3 years, we've made good sort of incremental progress.
Yeah, from my side, from another white male with an opinion, but like at Outlier, we've really put diversity first and foremost, and it's really a case of you have to just apply that principle in everything. Like, there's no one big, okay, we're gonna create a women in blockchain and now it's solved. No, it's like when recruiting, look to open up to female candidates, and like for those actually the personal introductions usually work a bit better, because to a job ad we tend to get more male respondents, but then to personal introductions we get more females. And like in our staff, I think we're now 30-70 female versus male, which is still not perfect, but I think is definitely above the industry average. And for founders as well, we really try to get female founders for all our programs. And and here we're doing a panel, like we're organizing lots of those. We're always trying to get female speakers, and often it's hard. Often like we've had so many cases of we want someone from an organization, and hey, can we get it would be great to have a female speaker, and then, well, no, we're actually we'll send a male. Just it just requires effort on all of those things. I don't know, be welcome, and come in, and please all open up. And I spoke about gender diversity, but of course diversity of backgrounds and all this, it's the same thing. So yeah, I'd say something that can only be solved through emphasizing it in everything you do, where you reach out and partner up and all those things.
Thanks. I want to ask one final question to sort of wrap up everything we've talked about here. And I know we just got a couple of minutes, so if everyone wants to give sort of a brief couple of sentences on their thoughts on this. I want to know that the panel is focused around investing. So what are your predictions of where capital is going to flow in terms of the blockchain and impact space, both in terms of maybe geographic regions and like subsectors or parts of Web3? Just where are you seeing some promise?
I'll start. So I think with what happened over the past year and a half and some of the crises with the war and energy, and it brought a lot more attention to climate. I'm seeing that especially in Europe. I think that they're way ahead, at least of the US. There's the projects that are working on climate there, a bunch of them are in our portfolio, are really seeing fast funding rounds like right after their last one. So I think there's really on the E and ESG, as there always has been more of a focus on E. As far as social, I mean, I think the last panel talked about that, and all these emerging markets and around the world where this technology is going to have a major impact in them leapfrogging, especially in Africa. I think leapfrogging some of the tech where they were behind. I'm seeing a lot of opportunity there. And then as far as G, I mean, I think as Scott was talking about with DAOs and governance, I just participated in the World Economic Forum, and Wharton wrote a paper on DAOs and, their legalities, et cetera. And so I think that you'll start to see a lot more innovation happening there, a lot more regulatory clarity. And so, I think that it is global. You will see certain regions sort of accelerate in certain areas.
Yeah, I think from my side, definitely agree that we have we have a lot of work to do in terms of getting out of almost like the Plato's cave of crypto bit. Like I think we have sort of this focus historically on the existing community, existing builders. I do think there's a lot of interesting innovations there with, for example, ZK tech, with a lot of privacy preserving tech, and also with just generally a lot of developer tooling that's improving, like middleware, Wallet Connect maybe being a good example of that. I think on the impact side, there's kind of two components. And I think Nisa covered the one well where it comes to like actually making real world impact and kind of escaping the cave a bit. The other one that I think is interesting is just tools for, and certainly we're part of this, I think, and so I'm biased, like tools for measuring and actually distributing funding according to impact. And another experiment beyond us that I would recommend looking into here would be Protocol Labs is working on, for example, impact certificates, like ways of defining, with some kind of committee, with some kind of like expert input, what kind of impact is actually being made in practice by some group. And I think that in order to really, by creating those kinds of almost financial tools, I think we'll actually be able to better encourage other traditional investors to participate in the impact space. And so that's an area that I'm definitely very excited to see move forward.
Yeah, for with regard to geographical areas, like we're originally a UK company, but I guess like others, the pandemic has had the silver lining of being able to open up to basically work globally. So we've had the pleasure now to work with various teams from Africa, various teams from South America, in Asia as well. Africa, the African continent, which contains many countries where many people live, but I think is definitely a huge growth area. I don't want to say growth market, but area for Web3 where things can be possible. And I think ultimately, because Web3 makes it possible to not only access information and communicate, like what you could do with a smartphone or even a feature phone, like you can access Wikipedia, you can whatever, you have access to information, but it can also you can own things with that smartphone or with that device, and that's really comes as full circle, because then you can start to earn, you can start to pay, and that can be somebody in the UK or the US or Asia or Nigeria. I think that, and the fact that more low-level things like network access, like there's several projects enabling network access in more rural or less developed area, where it's just a case of you put a bunch of devices there and suddenly people have network access. And the example that was mentioned earlier of, hey, we're staking ETH, and then from the proceeds we're giving people network access, that can really become a grassroots effort of more and more people get access, and they can 100% participate. They're not second grade citizens because they can only see things. No, they can participate like anyone. Yeah, so I'm quite excited about it.
Awesome. Thank you all, Aaron, Nisa, and Scott. This was a really great conversation. I believe we have one question in the Q&A, but I also know that we're about to come up on time here. So I'm going to read the question to all three of you. And if you have a moment to sort of type your answers in the Q&A box, that would be really awesome. And then I'm going to hand it over to Bo. But the one question that we had is, are we aware of examples where communities have established a DAO with inclusion as a significant factor to at least create the opportunity for inclusive governance? So if you can think of any DAOs that are working on this problem and you want to type that in the Q&A box, that would be amazing. And with that, thank you all so much. I'm going to hand it over to Bo to wrap up today's program.
Thanks very much, Anita. And thank you to everybody who's joined the panels. I've got like an entire list of notes that I would have loved to wrap up with. Maybe I need to put it out as an NFT that someone can kind of take off my hands if you want to get a good rundown of what's been happening. I really appreciate the insights, the questions that have been put here, and everyone bringing their best brain cells to this conversation. So thanks very much for me. Thanks for everybody. One quick kind of point is that we're going to be sending out a follow-up from this. There'll be a survey in there and an opportunity to connect with any of the companies or people that you've heard chat today. So with that, I appreciate it. Have a great rest of your week, great weekend, and thank you again.